So you have President Trump talking about tariffs today. You do have the NVIDIA aftermath, Josh. The reaction seems to be not a blowout. Demand is still strong. Deutsche Bank says a modest beat, nothing spectacular in terms of guidance. Is that why the stock looks like that?
Yeah, I think that's accurate. It's a beat. It's just not like the craziest beat ever. And understand, we're talking about like a company that over the last 8 quarters, they not only blow the numbers out, then they give guidance that's so far above where the median sell-side analyst is on consensus that it's almost like the analysts have been panting, running behind this stock, trying to keep up with it. Obviously, a phenomenon like that can't last forever, and ultimately it's going to run its course, but that should not be interpreted as these are bad numbers or there's something wrong with NVIDIA. The company is executing on its growth plan for this year. We've got confirmation from their 5 biggest customers that the spend that was in the numbers is going to happen. And then Jensen comes out, and with the cherry on top, he gives you like 10 unsolicited minutes at the end of the call about how bullish he is because of DeepSeek, which, if you remember, was the proximate cause of the sell-off that we had in January. So I think it's really as simple as, okay, it's a beat. It's just not the same kind of beat that we saw last quarter, the quarter before. But the market's digesting it, and I think ultimately the stock resolves higher, not lower. And I think for people that don't own the stock, today is a great day.
All right, Malcolm. I mean, you don't own the stock. You look at the price action. By the way, it's great to welcome you to our investment committee. We're happy you're here. You don't own the stock. You acknowledge that you missed it. You got a little discount today, and the stock hasn't traded well lately at all. How do you see it now?
I think realistically, all of the real sellers are out of that stock already. I think DeepSeek was January 25th, 26th, something like that. I think that revelation really pushed out anybody who wasn't extremely bullish on this stock. So maybe you see some people taking some profits where they feel like they need to. But realistically, this sell-off that we're looking at right now, I think DeepSeek did this earnings report a favor. It basically pushed out anybody who wasn't a serious holder of those shares and made sure that if we did get any negative news about Blackwell, which we didn't, we actually got positive news about Blackwell, right? Sure. $11 billion of their $48 billion in the quarter were attributable to Blackwell. And on the call, Jensen says this is the fastest uptick we've seen with any new technology we've rolled out. So I think there's reason to be optimistic if you're a long-term shareholder. But for anybody who is just trading it for the sake of trading it, that's probably a little bit of a downtick.
What if you're not a shareholder like you? I mean, At what point do you get interested?
I think the train has left the station. That's been my stance on NVIDIA for quite some time, because it does look like we're probably dislocating from really positive demand, really positive, we're 12 plus months out really from where they're able to meet demand. So they've got orders a year in advance. But I think the stock itself might become a little bit pulled apart from the story. And that's what I worry about as a potential shareholder.
Okay, Bryn, what's your take? Longtime shareholder as well.
I mean, the call was so great. It was a great call. And if you look at this stock on any metric, PE, PEG ratio, this is going to end up being 12 months from now. If you look at a forward PE, PEG ratio, et cetera, probably the cheapest of the Mag 7. When you look at Microsoft at a 30, Apple at a 30, not even remotely growing at the rate that NVIDIA is. And I just think you have this visionary leader that's with Jensen looking out so much further than we as investors or as just individuals can see. And I think that today we continue to get data points that this AI transition is going to be a secular trend, not just a cyclical trend. I think it's interesting. I mean, the stock is firmly in that 8-month trading window between 115 and 150 at the high. So I think we're going to still be in this trading range. But to your point, Scott, this is a great opportunity to start buying this name if you haven't owned it, because the call was just exceptional. 70% margins. That's probably going to go a little bit higher. Just so much growth trajectory. And I just don't see any competition from them.
Rob, it's funny. The sentiment around the name has changed a bit. I feel like after DeepSeek, the market is more looking to poke holes in the story than it has in maybe the last 12 months, at least. So maybe despite what has been deemed to be a great call from these guys, and by all accounts, good numbers. It's not like the guidance was bad. It's just the street has a different bar after DeepSeek.
I think the street's wrestling with something else on all these businesses. They're focused on the change in the second derivative, the change in the rate of change. So they all have terrific numbers, but they're not as terrific as they were. But on a relative basis, they're still much more attractive than almost anything that you could buy out there. You are able to buy, and this is why we increased our position last week, Scott. We're still underweight NVIDIA, but we've been buying. As you know, we started buying in the 90s. We bought a little more on the last dip. We bought a little more on this dip. And the reality of it is I think when investors step away and they're done wrestling with the slowing of the second derivative, they're going to look across the markets and realize that the fundamentals of these businesses, most of these businesses, their earnings have caught up. They've lowered the pricing, as has happened in NVIDIA. It trades at 28 times right now. It's the cheapest it's been in a long time. To Bryn's point, it's one of the more attractive. Yes, Facebook is more attractive. Yes, Google's more attractive. And the reality of it is once we get this macro headwind, it's not in a downtrend. These stocks, as Josh will tell you, they're still in an uptrend. It looks a little shaky. They've lost some of their momentum, but the fundamentals are still intact. And I think if we do get a little more of a pullback, I'll disagree with Malcolm a little bit, this train has not left the station. It's left the station if there's some shock to the ecosystem, sure. I don't think we're seeing that yet. You saw the news from Meta the other day.
Yeah, to that point, like this is nobody is overpaying for NVIDIA right now. 28 or 29 times forward PE. Keep in mind, over the last 5 years, the stock has sold at an average PE of 42 times forward. And actually, if you go back to January of 2023, at the dawn of this whole AI era, it was like a 90 PE, which people were screaming how expensive the stock was. Then it 5x'd because PEs don't matter, but that's another conversation. Right now, you are paying a below average PE over the last 5 years for this name. And if anything, they've earned a higher PE than the market just because of the degree to which they're executing. They haven't had a downside shock. But they haven't had a guide down.
That goes to the point I was making about DeepSeek doing them a favor, right? So they had a 40x multiple on this year's earnings coming into the year. DeepSeek happens, the shares sell off aggressively, and it brings that valuation down to about 30 times. Now we're below it with the sell-off today, and I think that gave it that cloud cover for this earnings report to not have to be as good as expectations would have been had DeepSeek not happened and the shares sold off. So all of the sellers who really wanted out of that name are already out.
That's a good point. Went into the numbers in a 12% drawdown. Did not go into the numbers at an all-time high.
No, but you know what? Of late into the number, yesterday into the number, the stock was up 4%. So it was trying to be as optimistic as it could be going into the number in the face of what had been not so great. I mean, it's down 14% from its January 7th high.
That's fast money, though, Scott. That is not real investors. I think real investors look at this as an opportunity. They're just trying to make sure that there's not some big massive deceleration in cap spending, which, again, there's no indications that that is happening.
No, but the other
why
stocks,
not be certain about that?
It's fast money also in Alphabet, which is down 17% from its high, and Microsoft, which is down 15% from its high, and Amazon, which is down 12%.
But those are all this re-rating of the momentum trade. They're getting sucked into that. You look at the momentum indices, and they're starting to roll over. It's starting.
They're not starting. They've
started
rolled
in July, but they've really rolled over. Okay, so you look at it from that time frame, right? And you say, okay, you've re-rated fundamentals. Now what do you do? Now what do you do given the relative attractiveness here? The momentum has been in financials, right? Can they deliver on earnings? I think you got to be more balanced about all this. And while I'm not incredibly enthusiastic about the markets in general, I expect some volatility. I do think that we've re-rated enough that you can be selective.
Those are
and
bad
pick
comps
some of these.
Alphabet, Amazon are not comps. Keep in mind, going back to Q1 2023 when this whole thing really got started, NVIDIA has averaged quarterly year-over-year earnings growth of 127%. It's just a
that's different than Microsoft and different than Google and different than Apple, right? I mean, those are different growth trajectories. There's haves and have-nots.